Hey everybody, I can't believe we're in the middle of fall already. We've got Halloween behind us and Thanksgiving right at our doorsteps. It's really amazing how fast 2021 has gone by. As we look back at October and the markets, we didn't get the big drop that historically comes in October. We did get a little bit of a speed bump, but it wasn't much, about 5%, and then markets are headed back up towards highs where they sit today. Also, corporate earnings came out for the third quarter, and overall they looked pretty good. Forward-looking statements had a few items in them where people were a little afraid or concerned about rising costs and the lack of being able to find supplies. And we'll talk a little bit more about that in a minute, but that has basically, as we look back at October, things were pretty smooth. As we go forward, there are three items that really we need to look at. We need to look at inflation, we need to look at the Federal Reserve and what they're going to do, and the idea of stagflation. If we look at inflation, what can I say? It's here. Everybody who thought, is it here, is it not? We've had 5 consecutive months of over 5% increases in the consumer price index. That is huge. The latest one that just came out today was 6.2%, the largest increase in 31 years. So inflation is definitely here, and it's really interesting on what's taking place because you have two parts to it. You have the demand side where people are just simply out buying, and they've got money in their hands, they want more products, and they're purchasing them. Then on the other side, you've got lack of supply. So we've kind of got a double whammy. You've got lack of supply, not enough goods and services to go around. Transportation and shipping have been really slowing down the process. And so you got lack of goods to sell, and you have high demand over on the other side. And those two things are just not meshing well. Even when you look at core CPI, strip out energy, strip out food, which can be really volatile, that was up 4.6%. And so you're really seeing inflation across the board. When you look at wages, you're seeing a big increase in wages. And what's that translate into? Immediately into higher costs. I can't tell you how many restaurants I've been into lately where they've either crossed out or they've put in a flyer saying that all their meat and chicken and beef prices have gone up, and so that they're raising the prices without having to have new menus created. But it's definitely something that we're seeing across the board. It's not going to go away anytime soon, and it's something that we need to continue to look at and address with portfolios. Number two, what is the Federal Reserve going to do about this inflation? One, they've already said that they're going to start tapering their bond buying. And so the Federal Reserve has been out ever since the COVID hit and has been buying bonds in the market to keep interest rates low. Some people are under the impression that they're only buying treasury bonds. That's not true. They're buying treasuries, corporates, junk bonds, anything that has to do with the fixed income market. The Federal Reserve is in buying. What this does is creates a lot of competition for those bonds and drives interest rates down. That's going to start to change. They're going to start paring back on that bond buying called tapering. You'll see that term being used. And so there'll be less competition and interest rates will start to move higher. So that'll be the first move of the Federal Reserve. The big question will be, when will they start actually moving interest rates higher? So far, nothing on the horizon, but I think that that will be here sooner than people think. And the real question will be, how quickly do they raise rates, and how kind of the velocity? Do they raise just a quarter of a point? Do they raise a half a point? All those things are going to determine how well the market takes the increased interest rates. For the most part, typically 5 interest rate increases and the market starts to roll over. I think because of the bond buying, tapering, that will be shorter. So probably by the second or third interest rate increase, you'll start to see the market soften. And we're looking into that and obviously following what's taking place there. Third thing is the term stagflation. Hasn't been around in a long time. Actually, last time we faced a stagflation situation was back in the late 70s, early 80s when Jimmy Carter was in presidency. What happened was, with the oil embargo, you had supply really shrink on energy. And then at the same time, that caused the demand for products to go down. So you had a sinking economy, or an economy that was stagnant. At the same time, inflation continued up because of the lack of energy. Well, all of a sudden we've started to see that energy, obviously right now, is going down. There's not a lot of oil and gas, and that product keeps getting higher and higher, as we all know when we go to the gas pumps. And it doesn't seem like Washington is willing to do anything to help that out. So the idea of eventually the economy slowing but still having the inflationary pressures in place could actually come around again. And we're watching that very carefully to see if we start to move more towards a stagflation environment as opposed to just a regular inflationary environment. As you know, if you're a client of ours, this last year we've been shortening up our fixed income and preparing for raising interest rates. The next thing, and where we're working right now, is taking our equity portfolios and preparing for, one, rising interest rates, but number two, much higher inflation. If you have any questions, please do not hesitate to call. We're always happy to assist anybody. If you're one of our clients and you're over the age of 72, you do have required minimum distributions this year. And so if you haven't taken that yet, we'll be getting a hold of you in the next 2 or 3 weeks and make sure those are all done by the end of the year. I hope everybody has a wonderful Thanksgiving, and I look forward to talking to you again. Thank you.